Well, happy Monday, traders, and welcome to the weekly outlook for this week. We're going to go ahead and take a look at 9 currency pairs. We've seen some great movement out of the pounds last week based on Brexit news, and we also had some positive news out of the US and China trade wars. So great things to go ahead and discuss. We're also going to take a look at the fundamentals and how we connect them all together. Right after this, we'll get into the details. Well, traders, welcome back. And yes, we're going to go ahead and take a look at 9 currency pairs this week. That's all setting up. In fact, I wrote a note here. It looks like there's about 5 of the currency pairs that are based off pound crosses. We'll look at those and see how they're setting up. So without further ado, let's go ahead and dig into the chart and take a look and see what's going on. Now, before I go into the charts, I do want to take a look at the calendar, because the calendar this week will determine how we're going to be able to see some sort of stronger moves out of the different currencies. Just like last week, remember, if you looked at the weekly outlook, and if you missed the last week's weekly outlook, I'll go ahead and make sure that that's available at the end of this video. So make sure that you go ahead and review the video right till the end, and you'll see the video that is last week's outlook. Now, we spoke about last week, and we spoke about the fact that there weren't a lot of fundamentals that are driving the market last week based on the calendar. Now, we said that the only thing that could really move the markets last week was any sort of flash news, and it was based on trade war or Brexit. And we had exactly that coming out on Thursday. And that's exactly what we're going to be doing right now as we review the calendar this week to see if there's anything that can move the market other than, of course, any sort of flash news. Now, let's go ahead and take a look at the charts. Well, in fact, the calendar. The calendar sets up right here this week. And we see right here that we have had a bank holiday here in the US as well as Canada. And probably the reason why we haven't seen a lot of movement happening this early start of the week already. Now, we do have some data coming out that we need to pay attention to. One of the data that I'm really keep an eye on is the New Zealand data coming out on the Tuesday. I'm going to go ahead and pull this across, and you see right here, this is the data we're looking at right here, which is CPI. Anytime you get CPI, when it's quarterly or yearly data, and you can see here for the pound, we also have some data coming out here for the pound. That's also quarterly CPI. So both for the pound and New Zealand dollar, this will be on Tuesday, this will be on Wednesday. So we're having data coming out on Tuesday and Wednesday for New Zealand and for pound. I'll definitely be taking a look at this. Now, if you take a look at what they expect in the forecast is expected to stay unchanged for the New Zealand dollar. But for the pound, they're looking at the pound ticking up by 0.1%, which is now going to be forecast at 1.8%. Now, if it's going to come out as expected, we may not see a lot of movement out of the market. It would be positive for the pound, because this goes ahead and reconfirms that if we start to see CPI starting to grow, that means that possible rate cuts would be needed in order to sustain the levels of CPI. Now, inflation is absolutely a key factor on any sort of data when it comes to rate decisions, and the Federal Reserve, the central banks, will be taking a look at the CPI numbers. Now, further down the week, you can see right here we don't have a lot of data coming out for much on the that's going to really move the market. I don't really pay attention too much to the monthly CPI. But then if you go to the pound right here, you can see that we do have, sorry, not the pound, the Aussie right here. We do have on Wednesday as well, we also have the employment change and unemployment rate. That's definitely going to be something that we're going to take a look at and see if we're getting any changes to that. I'm not expecting that to be a major price mover, but if the numbers are really off from what they forecast, then we could see some movement. But also, traders, very importantly, something you need to know. When I look at the data, I'm always looking at the technicals aligning up with the data. So if I'm looking at data like the unemployment change or the unemployment rate, I'm looking at to see where are we sitting based on the technical analysis, right? And each individual currency pair would be, of course, reviewed differently, because if we had a very strong support or very strong resistance level, and we've got data that's coming out, then that could be the turning point for that particular pair. So it's again very important that we connect the fundamentals with the technicals to line up what we anticipate the move to be for that week or that day. All right. Going back to the news right here, we do see at the end of the week, we have, of course, not a lot of data coming out at the end of the week. All right. Except for, oh, my bad, I forgot about China. We've got China's GDP coming out right here. That is quarterly, yearly data coming out right here. That's absolutely going to be some sort of price mover. We're going to see some change. And also keep in mind, traders, it is at 10 p.m. in the evening. If it's 10 p.m. in the evening, prices are very thin. We have very thin markets at that time. This is Asian session we're talking about right here. Things may move the market. We may have big moves in the market at that time if the numbers do come out a little bit different to what they forecast right here. Now, traders, what you should look at, and we're going to call it Halloween week. Halloween week is coming up right here, 27, 28, 29, 30 of October. Why? Look at the data coming out that week. It is crazy. We've got ADP numbers out of the US. We've got GDP, advanced GDP quarter results out of the US coming up. We've got the monetary policy report for the year, Bank of Canada. We have the Bank of Canada rate statement. We have the overnight rate coming out that same week. That's on Wednesday. And take a look as we move further down the line. We've got FOM statement. We've got the Federal Reserve statement, rates coming out. We've got the press conference for the FOMC. We've got Bank of Japan outlook report, monetary policy out in Japan, Bank of Japan press conference. Are you kidding me? We've got a whole bunch of stuff coming out. And then don't forget the big Friday. We have, of course, should I say the big Thursday? We've got Brexit, right? Remember, the decision needs to come down to the 31st of October for a Brexit decision. And then to top it up for the week, we've got the non-farm payroll coming out on Friday, the 1st of November. It is going to be a crazy week. It's going to be a crazy, crazy, crazy week. Sorry about that. A little bit of finger touching. All right, so crazy week we have right now at the end of this month. But let's go ahead and focus on this week. Check out the technicals. Let's go to the chart. Now, the currency pairs that I've been talking about, and I'm going to start with the Aussie and New Zealand dollar. That's one I did see on Aussie New Zealand dollar setting up for a possible trading opportunity for this week. Let's go take a look and see why. Well, traders, firstly, number one, if you go to the daily time frame right here, you can see that we've just broken out of that upside move. This is it right here. I'm seeing price moving above my wavy tunnel right here, which is giving me a nice little up move. Now, we did pull back. We close out with a bullish candle right here, which indicates buyers in the market. So I'm going to go ahead and say buy on dips, going long with the Aussie New Zealand dollar. Now, this is the thing that you need to be aware of, and I'm going to go ahead and point out this as well. With the fact the market's gone ahead and rallied up right here, we've dipped down right here. There is a possibility that price may go ahead and move down. So I'm going to say that yes, buy on dips, but if the market takes out the low right here, and that low of the daily, remember this is a daily time frame, and that low is priced at around about 1.0, let's call it 1.0664, give or take a few. That's the price right there, 1.0664. If the market does take out the low, then we may be expecting price to come down to around about 1.0596. And then from that point onwards, we'll continue to buy on dips going long. So I'm still going to say buy on dips right now. But if that low gets taken out, then we will not think about selling. We're just waiting for price to move down to a lower price, and then we'll continue to buy long. So buy on dips on the Aussie New Zealand dollar this week. And then we're going to go to another currency pair, JPY. This is the Canadian JPY. And there it is there. If we look at the daily time frame right here, you'll notice that we've now just recently broken above our very strong downward trend. And price has gone ahead and confirmed right here, confirmed that yes, we've gone ahead and broken above. You can see right here that closed up well above this red line, which is my automated trend line. And price is starting to move back up north. Now, if I look at my wave structure right here, I just want to go ahead and point out, although we want to buy on dips on this pair. Now, you could say, when I say buy on dips, it could be down off a 1 hour time frame. If you're going to buy on dips on this, then keep in mind that here is where we anticipated price to slow down. And that means that we've got, what is it trading at right now? We're trading around about 81.91, right? So 81.91 is where current price is trading right now, and we're looking for price to move up maybe to 82.91. All right, so 82.91. So we're looking at about 100 pip opportunity right here. All right, so buy on dips, go ahead and buy on dips, go in long, provided that when you get to this point right here, start protecting your position. All right, start protecting the position at the price of 92.91. All right, now let's go ahead and continue. That's the Canadian JPY. If we open up a EURCAD, EURCAD is also setting up an opportunity this week, and you can see why. All right, we've broken out. Now, I mean, I must admit, the opportunity has not presented itself yet. I'm going to go ahead and compress my charts a little bit, just a little bit, and there it is. Okay, good. And now let's go ahead and expand a little bit. I want to get those lines in there. Okay. So just a heads up right here that the EURCAD is creating an opportunity, but not confirmed yet. Okay. Now it's the EURCAD says that we could move back down south. Now I'm going to look at this and say that this could be just a little dip before the rally continues. Now, if you take a look at the current candle is not confirmed yet, which means by today, the close of today, we may confirm that yes, we are bearish on the EURCAD. Now the question here is, if it's just going to be a dip to the downside, a small dip to the downside, do we take it opportunities and do we trade that? Well, listen here, the trend is down. We're getting if we get confirmation that the candle is going to confirm that we're bearish on here, we're going to continue to sell the market back down south, and we'll continue to hold sales on the EURCAD until the market changes direction. Now the only time I would change my bias is if we trade back above this level right here, which is going to be, and you can write the price down there, at 1.4634. If we trade back above 146.34, then I would then take a look and say, selling is off the table, and we may go ahead and do some intraday trading, maybe just a small buy to the upside right here, and we may even start seeing a change of trend. Right now, the trend is still down. We'll look to sell on the rallies. So we're going to continue to sell on rallies, right? All right, so we're going to continue selling rallies on EURCAD, unless, of course, the trend chart starts changing. Now, I want to go ahead and take a look at the next pair, which is the Euro-Pound. So Euro-Pound, obviously with the good news out last week, Euro-Pound has given us a awesome move, all right? And you can see right here, we have, and some traders may even point this out and say, hey, big dog, you check out the King's Crown setting up right here, all right? Where price goes ahead and moves back up to that level, and we saw that big sell-off. That's fantastic. Now, the question here is, how do we trade it? Well, the signal on this came off right there. That was where we started looking to sell, because the market started trading below the signal line, below the trend, the automated trend line, which I call the wave tunnel. So we had everything confirming that the bear is in control. Now, how do we get in on this trade? Well, there's two ways to do this, traders. First, number one, for those that got in on that entry point, with your stops above here, that would be obviously the best place to go ahead and sell. But good thing is, prices move in waves, all right? And what's going to happen is the market's going to come back up and retest resistance and then drop back down south again. So how do we get in on this? Well, we wait. And we're going to trade this on rallies, right? We're going to sell on rallies. So if you look at the 1 hour time frame, which I've just pulled open here, you're going to go ahead and start looking for price to move back up again. So we see that price has eventually gone ahead and do this, bring this back here, and compress it up a little bit, drop down there. All right, good. So this gives a little bit more information here. So now what I'm going to do is this. See, price goes ahead and works its way back down, rallies up, very shallow retracement, drop back down. Now we're getting the retracement back up here. All right, if price moves back up to this level right here, this wavy tunnel, and then turns around and heads back down south, I'm going to look to sell. So the traders, you can do a lot of things. Firstly, number one, you can go ahead and use different types of indicators if you want to go ahead to identify selling opportunities, or you can simply go ahead and decide on selling based on Fibonacci retracements, right? If I go ahead and put some fibs on this, let me see my wave tunnel right here. So I'm in my fourth wave right here. So actually, in fact, I'm expecting price to move down before it moves back up. So I'll be watching this very carefully right here, because traders, if I look at my wave structure right here, we have it in a down bearish wave. Now, if we're in a down bearish wave, that means that price could go ahead and possibly test this level first before it goes in and takes out that high. So looking at what I've got right here, if you get any sort of bearish candle here, it may be an opportunity for you to start selling short. Now, these are for those intraday traders. Selling short will stop above the U-turn right here. Just make sure that the risk reward is good. I haven't checked that out yet, but make sure about that. In fact, let's do that while we're here. And let's see, if we sell right here, we're looking at about a 30 pip stop, and the target down here is 126. Are you kidding me? Of course, this is a great opportunity. All right. So where it's trading at right now gives us a risk-reward ratio of about 1 to 4. And so that means, traders, that yes, watch the euro pound for a possible sell-off. I think that's going to be good. Let's take a look and see what else we've got here. All right, we've got another currency pair, and that's going to be the what is this? Let's go to pound Aussie. All right, let's move to pound Aussie here. Take a look at pound Aussie. Now I'm going to move to the daily time frame. I like to look at the daily first, get a good feel of what's going on, and then also, traders, I'm just going to go ahead and hide some of the technical analysis just to give you a more of a clearer view of what the candles are doing. So we got the market breaking out to the upside. We are definitely in a bullish trend, traders. These type of retracements that you've seen right here, this is where you grab the opportunity, right? Anytime the market retraces back, it's time to start looking to buy in. So definitely on the pound Aussie dollar, I'd be looking to buy on dips this week. All right, buying dips. If you're running any sort of script or EA, you definitely would want to go ahead and just go ahead and deploy it in a direction. And the direction on this pound Aussie would be bullish. All right. Now, traders, I would probably be buying on pounds for the rest of the week up until maybe next week. And if there's anything else out in the Brexit, I may want to go ahead and stay on the sideline, specifically if there's no good negotiations being confirmed. And I don't want to be in this market when we get to the Halloween week, which is 27, 28, 29, 30, 31. Those days probably want to stay out of the pounds. They're going to be very volatile, not really a good place to be. And I won't be surprised if the brokers go ahead and send out some sort of information out saying, hey, we're going to go ahead and increase the spreads, increase the actual cost of the pound to buy in on that. I would definitely think that things are going to start increasing towards the end of the month. Just keep an eye on that. Okay. So buying dips is definitely the way to go on pound Aussie dollar. Don't forget, traders, always look at the risk-reward ratios. Make sure the risk-reward ratios are good when looking to trade these trading opportunities, because if the risk-reward ratios aren't good, you probably don't want to go ahead and trade it. You probably want to stay on the sideline, because I don't want to go ahead and get in on trades that are not going to be worth the rewards. So check out the risk rewards on those trades. Now, this is the pound Aussie, right? So pound Aussie, buying on dips on pound Aussie. Let's go to pound Canadian, and you can see we're going back to all the pound crosses. We've just sneaked above my my wave tunnel right here. All right. Now that wave tunnel is priced at around about 166.37. The fact that it's trading slightly below it right now is no concern to me. What I am interested in is buying on dips on this as well. Just the fact that we've broken above that is already a confirmation that I need. Now all I need to do now is to go down to the lower time frame, which is this one right here. This is the 1 hour. And then go ahead and make sure I buy in at the right places. All right. Now, great places that I like to buy in is when the market retraces. Now, again, you could be using any sort of indicator, but if you take a look right here, wave 1, wave 2, wave 3, now we're in wave 4. This is actually an opportunity here to put your stop below here. So let's go ahead and show you exactly how this would plan out. All right. And I want to double check my waves just to make sure that I have it all put together. Let's see, yeah, there it is. Okay, great. So you see how I've got this set up right here? We have got wave 1, wave 2 up at the top, wave 3, sorry, 2 at the bottom, and wave 3 at the top there. And then I've got wave 4. Well, in this case right here, what I'll be looking to is placing my stop loss, and this is pound Canadian. Place my stop loss just below the low. Now, this retracement that we had right here is great. It gives you an opportunity to get in with a better price, but looking for price to move back up. Now, the two things we want to look for here, how much are we risking and how much are we going to be gaining? That's important right here. Every time a fourth wave comes into play, you want to check out that. So right now, we probably put in a stop loss of about maybe 70 pips. I would say 60 pips actually. And you look at the profit on this, 365 pips going long. Listen, who can argue with that? That's not a great opportunity. Remember, we're risking 60 for 360. All right, so that is definitely good risk-reward ratio right here. Now, what we're going to need, traders, is we're going to need an entry point. So entering at market right now would be a good option for me. Enter at market, put in a 60 pip stop, and then looking for a 365 pip profit. So this is what it's going to look like if I go ahead and place a trade. All right, I'm going to go to my place my order. I have to work out what the risk is going to be. So go ahead and work out your risk, whatever that's going to be. And we said that the stop is going to be 60 pips wide. All right, so we're looking at 60 times it by 10. We're looking at oh, my bad. That was a horrible calculation right here. Let's just see here. All right, there we go. So 8.33. All right, so if I go ahead and do this again, place the order. Let's go ahead and put in, we said 8.33. Okay, and we're going to go ahead and put our stops in. This is going to be a buy order. Make sure we get this right. Last time I messed up on this one. And we're going to put in a stop of 60 pips. And we're going to put a target. I'm just going to go 365. All right, and I'm going to go ahead and place this trade. Oh, and this is going to be based off, we're going to say this is an H1, because on the 1 hour time frame, H1 entry point. And you can go ahead and add here and say daily confirmed. When I say daily confirmed, that just means that my daily is in the same direction. So let's go H1 entry and then daily confirmed right here. And that's just making sure that, hey, I've got all my ducks in a row, everything is confirmed in the right direction. All right, go ahead and place the trade. Now, I should have my stop just below the way forward. If it's not, just make sure that you make that adjustment. If you look over here, I don't quite have it, so we may need a little bit more than a stop. Let's see here. I'm going to try and take a look at that stop. And I'm going to have to trigger this. All right, and the low, hang on, let's zoom in a little bit more. The low is actually at 65.35, so maybe, I always say 10 pips below that would be great. You don't need to go 15, but if you go 10 pips below that, that'll be 65.25. So let's go ahead and do the update to the actual order. So what do we say? 65.28. So go to the order itself and stop loss 65.28. Let's just make sure we got it exactly what it needs to. All right, there it is. The risk reward ratio is still good, and the stop's a little bit wider. You may want to check that before. So it's actually an 89 pip stop instead of a 65. You may want to just adjust the lot sizes accordingly. Make sure that you're in good equity management on that. And there it is. Okay, there's the adjustment being made. Let's go take a look at the target. Target's just about there at the level where I want it to be, so I'm going to leave it just like that. That's good to go. So now we've got a good risk-reward ratio trade. You can see that this is giving us 90 pips. Let's call it 90 pip stop. And we said that we got about a 365 pip profit over here. So that is close to 1 to 3.5 risk-reward ratio. Great trading opportunity. If it doesn't work out, market comes back down a little bit lower. That's okay. We're going to go ahead and look to re-enter again. We're probably going to get in at a much lower price. So the risk-reward ratio will be larger. And just the fact that we've got a 3 to 1 or 1 to 3.5 on the first trade, the next trade may be even about a 4 or 4.5 risk-reward ratio, so that's fine. All right, so we're good to go. That's it. All right, next thing. Let's go take a look at the next trade. And the next trade is going to be on the JPY. We're going to do pound JPY. So we're going to get a lot of these pound crosses right here. There's also another confirmation. Price has gone ahead and bounced just through that level there. That's awesome. You want to go down to the lower time frame and look for your entry points on that. I'm not going to go through this as an example, but this is exactly what you would do. Go down to the lower time frame and execute a trade on this one right here. Pretty similar to what I did on the pound Canadian. So we definitely want to look to buy on dips with this particular pair. What I like about this too is I've just seen sentiment right here confirm. You see that little green line? It's this green line that we saw over here. It's now appearing right there, letting me know that market sentiment on the daily is now starting to push this pair back up north, which is awesome. Looking for it to rally. Right, now traders, you can absolutely, I'm not even looking at larger time frames, right, larger than the daily, but you can go to the weekly and pop that open, and you can go ahead and take a look and see what the markets are doing on the larger time frame. You can look at the support, resistance, all that good stuff to confirm that whether or not you're comfortable with that trade, because you have to be comfortable with what you're doing. All right, you absolutely have to be comfortable. So pound JPY, same thing, buying dips, going long. The other one would be the pound US dollar, a no-brainer right there. All right, pound US dollar, also giving us the opportunity right here. See how it breaks through? All right, broken through that resistance. We're now coming back to retest it. When you go down to the lower time frame, just buy on the dips. This little dip right here is exactly what the doctor ordered and exactly what we need. We need buying on dips so we can go ahead and continue the rally back up north. Now, you could also once again go down to a lower time frame, higher time frame, like we saw over here. This is the weekly. We've seen strong support both times. Support there back in 2016. We now got 2019 support right here. So over a period of 3 years, we've had support at the same level. Markets are holding off at that level. Now, I do agree, if you look at this a little bit zoomed in, we do have a resistance that we're coming up to. All right, we're not quite there yet, but we have the market coming up to resistance. We've broken above this level right here, which is confirmed as a support resistance level. Markets come back to retest it. Well, if we continue to break, we should be heading a lot further up. In fact, if the pound's going to be in a larger range, then we could see this pair doing something like this, where it's going to chase after the highs up here at the top. So here it is. All right, and that would mean that we are range bound, or we've just got double bottoms, market breaking through the confirmation point, and we should see the pound going further up north. Everything will be debated once we get to that level. Right now, let's just focus on buying on dips on this pair as well. All right, just because this is a midterm or short-term view that we're looking at right now doesn't necessarily mean that this is going to be a long-term outlook for this particular pair. But keep your eye on it. I think we're going to be looking good. And then we've got finally a couple more. In fact, one more. We'll look at one more pair, and that's going to be US dollar CAD. This is the US dollar CAD right here. Now, before I go ahead into the details of this is the weekly. You can see a big bearish candle here in the weekly, but I'm also seeing here that there's a lot of consolidation there too, all right? But now, before I go into this, let's go ahead and take a quick look at dollar index as well as the US oil. So dollar index, if I go take a look at dollar index right here, dollar index has started to fall, and we're anticipating, we spoke about this a few weeks ago, we're anticipating a breakout of the dollar index. All right, so we definitely want to see a breakout. In fact, if I go to the daily time frame, I may be getting a little bit more insight on exactly what I'm looking at right here. Let's see here. All right, and let's pull up some technicals here. Oh, there it is. Okay, so we've seen the market come back, and this is what I spoke to you about. And I said, hey, listen, guys, we are expecting price to come back to retest this level as a fourth wave. And I said that price may want to go back up to that fifth wave and complete that fifth wave. We haven't quite got there yet, all right? But the key thing here is if we do break out of the support, then yes, price could move down. If we go ahead and bounce off that support and start heading back up north, then here at the fifth wave is where we're anticipating the dollar index to fall. That means, traders, if we start seeing dollar index rally, that means all the crosses against the dollar will go ahead and start seeing a little bit of a dip, right? So we've got to check that out. So now US dollar CAD, right, would absolutely be affected by dollar index. Let's take a look at US oil first and make a decision as to what we want to do on the US dollar CAD. This is why I'm not a fan of US dollar CAD, because sometimes we get some sort of indecision on that pair, just because we've got dollar and we've got the US oil that's it's heading in the same direction and it tends to move that pair sideways. But here we got US oil open daily time frame. We are seeing the market coming back up to resistance. We've actually anticipated that we could see US oil dropping back down to, in fact, this last 24 hours been bearish. Now, if we go back to what we've got here, we're looking for US oil to drop back down to this level right here, which is just about 41. Yep, about $41 a barrel. So looking for US oil to drop down to $41 a barrel. We've already gone ahead and tested that right here, the backside of the trend line. So we're expecting a fall in US oil. Now, if that happens, what's going to happen with US dollar Canadian? Well, this depends, all right? And I'm going to go back to US dollar CAD right here. And this may be a stand on the sideline type of currency pair for me, but for you, you're going to have to make a decision on that. So let's go to the daily. So if you look at the daily setup right here, on the daily it says, yep, we're heading south, breaking through that level. Now, that would mean weak dollar and strong Canadian. But just like we saw on the chart right here, it is a complete opposite today. In fact, the charts are telling the dollar index and the dollar index and US oil have both. I've looked at dollar index. Dollar index looks like it's holding that support. We may have a little bit of a dip on dollar index, but then start moving back up north. So I'm expecting maybe a very short-term dip on dollar and then another rally on dollar. Now, we've got US oil. US oil on the chart tells me that it should be heading south. All right. So weak US oil and stronger US dollar. So if I look at this chart right here, this chart's not telling me the same thing. And when I look at this, I then go to the fundamental and say, well, what could change it? If I go to this week's news, and I look at the data coming out this week, and I'm like, well, there's not a lot of stuff out here. I mean, we've got some retail sales, we've got some CPI coming out right here. I don't see a lot of stuff right here that could actually move the dollar itself, nor the the Canadian dollar as well. So when I look at this, and I look at the setup here on the US dollar CAD, I'm pretty much saying it's a sit on the sideline for me. I don't want to get myself all involved in something that's maybe indecisive as to where it's going to go, and I'm not 100% certain which way it's going to take off. Also because the fact that we had very strong levels of support for the dollar index and resistance with the US oil. My technical perspective on this would be that we may see dollar CAD rally other than head south. So if that's the case, I'm not seeing it setting up here on this actual pair. It's not telling me right now that we should be looking for a rally. It's telling me we may look for a dip. So I'm going to wait for better confirmation on that. All right, well, that's it, traders. That is all I have for you this week. Good luck with your trading. If you have not subscribed to this channel, please go ahead and do so. Click on the button below. Also, click on the bell button. So as soon as we post videos, you'll get notified of exactly when the posting is. Love you guys. Hope you have an awesome week. Hey, listen here. Throw some comments in the chat, in the comment boxes, so I can go ahead and respond on that. I will be looking at that. If you have anything that you'd like me to go ahead and review next time around, make sure you go ahead and send it out in the comment box, because if you don't, I don't know what you want, and I don't know what to be able to review for you. So go ahead and do that, and we'll see you next time. This is the FX Big Dog, signing off.